Welcome back to Main Station. So in this video, I'll be going over Google, Amazon, Apple, and Twitter to finish off. And with Twitter, I had my one video I posted a few weeks ago. I don't know, where I basically talked about how Twitter ain't looking too good, at least for our midterm future. And yeah, I'll be diving into this at the end of my video, so stay tuned. But until then, well, this is Google, and as you might know right now, or already, that I do not fancy Google too much, because its trading history doesn't really fit my style. But even though I will mostly look at it at a weekly or daily time frame, and this is what I'm doing now. So, well, yeah, we hit our 50% Fibonacci retracement mark, and then now are holding at it, and most likely we will see a daily equilibrium form if we hold this uptrend line on the bottom. I know it's not very exact, so you should of course take it with a grain of salt, but our top trend line is quite intact, actually, in my opinion. So you should, you should look at these two, in my opinion. But anyway, I think that most likely, since we hit a lower high compared to this right here, that we mostly will turn into an equilibrium to consolidate this move, maybe break even this line right here, or hold it. I don't know yet, but I think most likely we will see an EQ, and after that a continuation to the upside, because we are actually consolidating on our 50% retracement mark of the Fibonacci and below our 0.618. So this does look quite bullish, in my opinion, and this doesn't only count for Google, although this does look a bit more like a bear like a bear flag. We made higher highs compared to these two right here, so I think this is more bullish than bearish. Also, our bear flag is quite narrow, so this usually indicates that if we see a move down, it won't be too long and not too sharp, or it can be sharp, but since we have made quite many or quite a lot of percentage gains from the bottom, that we won't reach so far back down again. And well, this would be Google, not anything too specific. We have some resistance incoming right above the, or between our 0.786 and 0.618. So this doesn't look like, or it's not the most clear trading setup regarding support and resistance and Fibonacci, and maybe our Fibonacci won't be too important either, since you can see we are just chopping back up and forth, so since this is consolidation area, you should be cautious, and this is why also I'm not using my EMAs right now, because this is not trending, and when things are not trending, you don't want to use trending indicators. So and I might look into some non-trending indicators, but well, until then I'll stay with mine and just keep it simple with support and resistance. So not too fancy TA on Google, but going into Amazon, I think we are getting into an interesting area, since this looks like a bull flag on a weekly, also on a daily time frame. And well, we broke our longer downtrend line. Bullish, I've now retested multiple times. If we go to the daily, then you can see we touched it up to 3 times actually, and well, we hit lower lows every time, so you should keep this in mind. Also, well, we hit high right here, but I think this was on either a big update on SPY or some bullish news. I don't know exactly, but I think if you draw a line right here, this can be looked at as a bull flag, like this. Maybe, you know, it's not too clear, but basically, since we made lower highs and lower lows on this in this area, I think this is most likely to be a bull flag. Also, this move, you know, we came back down only to our 0.382 mark and not to our 0.5. So this is a bullish consolidation after a run. And since we also, well, we haven't made higher highs compared to this right here, so I'm not too, or we are not all bullish yet. Also, if we activate our EMAs here, then, well, we are just on every EMA on a daily time frame. So this is interesting, and yeah, just also a reason or one more reason why we are in this choppy area and are seeing back and forth movement. So, in my opinion, I would like this to break out of this, come back up to our 0.5 percent retracement mark, and actually reach up to these highs and break our 0.618. Then I think we are looking bullish for the midterm and longer term on Amazon regarding RTA. So, is there anything else? I think, well, of course, our resistance lines up at a high 17,000s should be looked at, but except that, I think we are looking actually quite bullish. This is not only on Amazon, because if you look at Apple, then this is, in my opinion, my most liked scenario out of these 4 or out of these 3. But Twitter isn't really, or it's more of a better scenario. But I'll be showing you this in a minute, and I think I'll be keeping this video also quite short. This is more of an update on recent trading activities, not anything too new. And yeah, well, we are basically consolidating in every area. So and in my opinion, a consolidation phase isn't really anything bad. Of course not. It's more, you know, maybe time to do other things, or to maybe figure out some trading strategies, entries, exits, and yeah, just to rethink your trading style, and yeah, get to know some other indicators, and just keep your RTA always evolving. And I think for such time, a consolidation phase is the most, or is the best. So, well, this is Apple, and yeah, I told you this was an ascending triangle. We broke it and are not looking quite bullish. This looks like a bull flag on the daily time frame. If I switch to 4R, then I think we are in an equilibrium with lower highs and our lows. Yes, our lows are quite far from our high. So, well, this could look like a mini bear flag, or this could be looked at as a mini bear flag, and this would indicate that we see further downside. But I think this could move into an equilibrium. Also, we haven't lost our gains, which we made from our low right here, out of the 141. And what I would have liked to actually is to come back further down to close this gap, to either close this gap right here, or to just retest the support right here on 134. I would have liked that actually quite a lot. This can still go into a prolonged bear flag, but and since this has been like too V-shaped in my opinion, although we had an ascending triangle, I'm quite cautious. We also hit our 138.2 mark quite nicely with this run, and are consolidating below it. So I think we will most likely break it upon the next upswing, and then we will also most likely break 182 and maybe see even a run to our 50% adjacent mark up at 190, yeah, or no, 188, 187. So I think this would be our next point of resistance. Also, well, we can break our 0.382, but we mostly will find resistance up at these two levels of 187 and 182. So still a nice opportunity, and of course some gains to be made, around 6% maybe, or 6 to 8%. So it does look like a nice opportunity in my opinion. And since this looks like a bull flag, god damn it, I don't know why my voice is breaking all the fucking time today. Again, what the fuck, man. It's not like I'm sick or whatever. I'm not even tired today, luckily. So also because I'm no, how you call it, I don't know how you call it in English, a time when you are off from work because you're basically sick. You call yourself sick. I mean, I don't have a cold or anything, luckily, but I went off into what I'm dealing with right now, so whatever. And yeah, keep my personal information out of this video, at least for this video. And yeah, well, looks nice in my opinion. If we break this to the downside, then I think we will most likely find support at our recent 0.362 mark, around 162 bucks, and find some support there and see a short-term upswing. But I think if this breaks bearish, then we will most likely look at low lows on Apple. But I don't think this is too likely, or I think, and this is of course also a reason, or this is also a reason I talked about in my latest videos on Apple, is that these very bearish news which we had on Apple and Facebook and so forth are actually looking, or are reasons why I'm looking into the other direction. And if I just pull up maybe Facebook real quick, then well, we are seeing similar moves. Nice gapping up, a retest of our upper trend line, which we broke with some decent volume. It was okay, but this very big gap up of what it is, or 10% gains, about 10% gains, and a consolidation after that, which, even though we broke, maybe we can look at this as a descending triangle. Yeah, I think this is, looks like one, like this. So if this plays out and this is only a retest, then we will look lower and to break, or to come back down to 152. But until then, I'm not too sure. This still could be looked at as a bull flag if this moves only down like to 160. Then we can still be looking at this as a bull, or as a bull flag, and looking for, and then we would look for further upside on Facebook. But this This is very narrow trading, so you want to be cautious. Also, we hit our 0.5% retracement mark, and since we actually dumped quite a lot on Facebook, you know, around 50%, not quite, but like 45%, maybe if I just pull this up, yeah, 44%, then these are quite nice gains. So yeah, if we go up above this 0.5 retracement mark on that Facebook, then we can also look for further upside on this stock. So, you know, since the S&P looks quite bullish, I think most tech stocks will follow. Also, the Nasdaq and the Dow Jones are looking quite similar. And yeah, to finish off my take of this video with Twitter, well, maybe not as nice as our other stocks, and I'll be looking this at the 4-hour and hourly. Well, if you want to know what this is all about, then I want to check my latest video on Twitter. It's called The Problem with Twitter, I think. And well, we are still seeing this upper trend line unconfirmed. We had a short wick up above it, but on the next 2 trading days, or on the next trading day, we dumped quite hard, around 10%. And now we're seeing basically a bear flag on the hourly. You can see it right here. And this is following actually my second arrow, or my second scenario, which I drew quite nicely. My first scenario maybe was too eager, and what is also interesting that on the 4-hour and hourly we moved quite correctively to the upside, which also had me looking at more downside. This can also be looked maybe as you know, ascending triangle. Ascending triangle, like this maybe, which would be bearish. So the bearish scenario is still playing out in my opinion, and most likely if this breaks through, then we will look at back down to 267, and if we retest this area, then I think we will most likely see it dump again. And this is of course because of our important head and shoulders. You can see it quite clearly. Also, we had maybe a short island right here, so this is also interesting. All in all, it looks quite bearish in my opinion. Of course, if the S&P, Nasdaq, and so forth are gapping up quite hugely, or are gapping up in a big way, then well, we can look for further upside also on Twitter. But until then, I will be looking for further downside. Also, we now see, or we are seeing our selling line gap up gap up above our buying line, and maybe see if we see our ADX trend indicator come back up to 220, and then maybe even further, we can see our bearish trend actually start to happen. So yeah, my predictions of Twitter so far have been quite right. We are now longer in this, or we are no longer stuck in this trading range than I would have thought. But has me thinking of Tesla, although we gapped up, and yeah, so well, I can look at Tesla too, of course, and well, still not, of course, not trading range. We came back up more than I would have thought we would, and are now in a consolidation phase. We are most likely building an equilibrium on a daily time frame. If you go to the 4-hour, then you can see it also, you know, like this. And you don't have to be too exact. Maybe use these lines or these wicks, and yeah. So this could break to the upside, of course, but since we made lower lows and lower highs on Tesla, I will only think of a trend change if we actually break lower highs and are starting to make higher lows. So until then, I will look for it to come back up to this resistance line